a central bank meeting here in India. And I think let's quickly go across to that, right? Let's address that. What's going to be top of mind? There are so many moving parts, but a 25 basis point cut is very much in the baseline. Latha is here with the editor's take before she rushes off to the RBI HQ. Latha, morning.
Yes, 25 basis is definitely priced in, but only a 25 basis will be seen as not enough or even hawkish. There has to be some more signs. It's either a stance change, and now the majority have moved over to yes, it will change from neutral to accommodative, or an outside chance of a 50 bips cut. Can't be ruled out. If everyone is expecting a 100 basis cut by August, that is, the repo rate is 5.5. What is wrong if it is 5.75 as early as today? So it's not entirely out of the realm of possibility. And why do I say that? Because growth and inflation will have to be marked lower. The Reserve Bank is definitely at the highest level in terms of forecasts at 6.7% for the current year. The economic survey itself said 6.3 to 6.9. And RBI put itself on the upper side of that range. Chances are they will cut it down to 6.3 or simply say that they see a 25 to 30 basis downside risk because of the global factors. And they're not giving a precise number because we don't know how the global factors will go. The more important downward revision would be the inflation revision if it came. It's now common knowledge that goods that don't go to the US will find a market, try to find a market elsewhere. There's going to be excess capacity elsewhere. And so a disinflation in Asia seems like a given. And therefore, there is scope to reduce it from 4.2 to 4%. As it is, Jan and Feb numbers are also below the Reserve Bank's expectation. So even last year's number could be revised lower. All this will be seen as dovish, especially the inflation forecast number. Liquidity, they won't do much because they very clearly divorced it from the policy. It's an ongoing effort. If in the press conference there's any reassurance that we have decided to keep 2 lakh crore liquidity as a permanent surplus. Because once before the RBI had said we're going to keep 1 to 1.5 lakh crore deficit as our regular policy. It's possible that they give a number and say that we will keep it as surplus. If they go that far, that'll be extremely positive. On non-policy matters, reducing risk weights on unsecured loans, etc., I doubt they will do anything. Since we are in the midst of a huge economic growth issue, I think there isn't much to do on the other side.
Yesterday, the way NBFC stocks were rallying 9-10%, of course, the market was recovering, but specifically how NBFCs were rallying much beyond banks, it was almost as if they're getting some new relief measure.
A rate cut is always positive for NBFCs, not for banks, because banks have to reduce the repo rate, but their raw material deposit rates fall when it falls. Whereas for NBFCs, the raw material is what comes from the banks. That is already cut. So in a rate cutting cycle, NBFCs benefit. In a rate hiking cycle, banks benefit. That's a formula.
All right, Latha, thank you very much for that. And of course, we'll come over to you as you take us through that RBI policy as always.